What 3 REITs with dividend yields greater than 22% does today's market offer, and should a long-term investor choose REITs based solely on the highest dividend yield?
Can somebody come and save me? I just wanna know. I wanna know.
Welcome to the Invest with Jiri channel. Before investing in REITs, there are some basic questions that should be answered. What is a REIT? What are the benefits of investing in REITs? How are REITs traded? What are the current state of the real estate market? 3 REITs with the highest dividend yields. Which company would I hold for the long term? What is a REIT? A REIT, Real Estate Investment Trust, is a type of investment fund that specializes in real estate investments. REITs were created in the US and a popular way to invest in real estate without having to directly own and manage the property. REITs invest in different types of real estate, such as commercial buildings, apartments, hotels, hospitals and more. Investing in REITs provides investors with the opportunity to participate in the real estate market and earn income from rents and gains from rising property prices. What are the advantages of investing in REITs? REITs are required to pay out at least 90% of their profits as dividends to their shareholders. This makes REITs an attractive source of regular income for investors. Like stocks, REITs are traded on public exchanges, which provides sufficient liquidity for buying and selling. Investing in REITs provides investment diversification into different types of properties and markets. REITs were introduced to allow the general public to invest in real estate without the need for large amounts of capital for direct real estate purchases. They are popular among investors seeking regular income and long-term growth in the value of their real estate investments. How are REITs traded? REITs can be traded on public exchanges similar to stocks. That is, you can buy and sell REIT shares through a trading account with a broker or an online trading platform. In the brokerage platform, you enter the purchase of the selected REIT. Specify the amount of REIT shares you want to buy and the price at which you want to make the trade. Once the trade is executed, you will be able to track the progress of your investment and dividend income. You can also sell your REIT shares at any time and call your money back into your account. What is the current state of the real estate market? The real estate market in the US is experiencing instability due to high inflation and associated high interest rates, increased energy prices and the war in Ukraine. According to JLL, a firm specializing in real estate services and property management, the US economy is in a strong position, which could stir the real estate market and mitigate the negative effects. However, the economy is slowing down and is being affected by the Federal Reserve Fed raising interest rates and increasingly restrictive fiscal policy. Real estate transaction volume declined significantly in the first half of 2023 according to RSM US. We are talking about a 40% decline and a 60% drop in the total sales volume compared to the last year. 3 REITs with the highest dividend yields. I've selected REITs with dividend yields between 22% and 24% for today's video. Yes, you heard right, you can find dividend yields that high in today's market too. Amur Residential REIT, ARR 24.40%, Orchid Island Capital, ORC 24.10%, Office Properties Income Trust, OPI 22.40%. On the face of it, this would seem like a great pick. 24% would mean that if I don't address the share price, I'll only get a return on my investment in 3 years on dividends. Unbelievable, but keep listening before you start buying. Beware of buying REITs based on dividend yield alone. Once you unravel more information about individual companies, you find that they are either highly leveraged or that they pay dividends at levels that cannot be covered by profits and are therefore unsustainable. The first company is Amur Residential REIT, ARR, is a real estate investment trust. It focuses its investments primarily on residential mortgage-backed securities, MBS, and other related financial instruments in the real estate market. The company's principal earnings and income are based on the difference between the interest payments it receives on its mortgage investments and the costs associated with financing those investments. The future growth of the company looks positive. However, it is worth noting that there are large falls in turnover and profits between 2021 and 2023. In terms of financial stability, the company's debt has risen from 518% in 5 years to 711% today, which is an alarming factor. Other financial ratios look fine. Regarding dividends, the company shows volatility in dividend payments. Cash payout ratio of 96.7% is not adequately covered by cash flows, which may indicate unsustainability of dividend payout going forward. Another company is Orchid Island Capital Org, which like ARR specializes in investing in mortgage-backed securities (MBS). Its earnings and income are derived from interest payments and gains on these mortgage investments, and Org focuses on generating dividends for its shareholders from mortgage transactions and investments. No detailed information is available regarding Org's future growth and financial health. However, the financials show a drop in sales and profits between 2021 and 2023. In finance, it can be observed that current assets, $360 million, do not cover current liabilities, $4.2 billion, and the company's overall debt to equity ratio appears high. Regarding dividends, the company is not profitable and its dividend payments are volatile. A negative payout ratio of -219% indicates that the company had a loss year and/or is paying out more in dividends than its earnings. Finally, let's review the company Office Properties Income Trust, OPI. It's a real estate investment trust specializing in office properties. OPI owns and manages portfolios of office buildings leased to various tenants, including corporations and institutions, and generates rental income and real estate gains. In terms of future growth, earnings are expected to decline by -77.9% over the next 3 years. Revenues are growing slower than the average market in the US, 7.8%. The decline in sales and profits between 2021 and 2023 suggests that the company is unlikely to be profitable in the next 3 years. On the financial side, current assets, $148 million, do not cover the company's long-term liabilities, $2.6 billion. Debt ratio 190% is high. The debt ratio has increased from 165% to the current 190% over the past 5 years, and debt is not well covered by operating cash flow, 6.8%. Mortgage interest payments are not adequately covered by earnings before interest and taxes, EBIT. As for dividends, the payout ratio is okay, but dividend payments have been volatile and have declined over the past 10 years.
Can somebody come and save me? I just wanna know. I wanna know.
Which company would I hold for the long term? Simply none. By the parameters given, the companies show too much risk for long-term investment. Overall, it seems to me that the REITs selected want to lure investors with their high dividend yields to attract more money into the fund. This seems short-sighted and unsustainable to me, and I would avoid these companies. So unfortunately, I'm not going to offer you some shortcut to the ideal choice between a quality REIT stock and high dividend yield. I wanted to use this video to point out that chasing unsustainable dividend yields in REITs is nonsense. If someone offers you a hot tip to buy, do your due diligence and check for veracity. Don't buy blindly and be smart about your money. In the long run, even at the cost of lower returns, you will sleep easy and enjoy steady growth. That's all for today. Have fun and invest wisely.
I could run through the fire, I could conquer the night. If I can make it, if I try to draw the red light. I could run through the fire.